Hey, what's up, guys? Putting out another video just because I feel like it, and I didn't make one yesterday. So, anyways, putting out a video to talk about kind of what's happening right now, and what I want to show you here on the triple Qs. I think this is actually a great spot right here to short, and it was better this morning, which is where I added to my short position. But we're right there basically, so we're close enough. And this is a 1 minute chart, so you can see I've drawn out this. My line's getting extended, but here's a 1 minute trend line. The market's kind of been marching up this, and then as you can see, we broke that. And then look at these back tests, back test, back test. These are 1 minutes. So now, yeah, we could back test again, run up to tag it here, or we could fail. But I think we're probably gonna roll over. And if we roll over right here, it still plays into the bearish scenario. You can see. So we opened this morning, we gapped pretty close to resistance. I pointed that out in my earlier video. So go ahead and watch that earlier video. But now look at the price action on the 1 minute. Okay, you've got you opened, you sold off instantly, you recovered, but you didn't make it to the previous high. So here's the previous high right up here, and the 1 minute you only got to right about there, so you a little bit less of a high, and then big sell off, and we filled the gap. That's what this did. So here's your gap fill right down to here, filled the gap, and then it bounced off the gap. The buyer stepped in. So still, this is what you'd usually see after a big move. You still see some bullish sentiment, and the buyers still think it's going higher because it's gone higher the last 2 days. So when you gap fill, that's where the buyers look to step in. And sure enough, that's where they did step in. However, if we roll over right here where we're at, then this high, this previous peak right here, would have been a lower high as well. So look at that. Here's your high, and then here's another high. So, and that's if we roll over. So at this point, what I'm watching for is this thing to roll over. I think we're going to get a nice big red candle, punch down anytime, any minute now. It might even come while I'm making this video. So I think we're going to get a nice red candle punching down, and that sets in the lower high, and then we start to make our way lower, and we start the next leg of the bear market. That's what this looks like. So let's look at the other charts and see where we're at as of right now, and we'll see how that goes. Let me go ahead and move my recorder. All right. And, I haven't even looked at this chart yet too much, but so I'm just going to do it as as I'm making the video. All right. So look at that. So you got the gap open, the hard sell. Now you're recovering. I think we fail right here or close to. I don't think we're going to break over these highs. It's possible we could. And if we do, we're going to run up to this this is your trend line right here. However, I don't, like I say, if everybody's watching a resistance line, which is basically right up here, you're either going to overshoot it or undershoot it. And so if we break through here and make a high, then we're probably going to overshoot it, and we're going to run up to, somewhere up in here, maybe 208 or something like that. We can mark that out just in case that actually does play out. Right there. Right about in there is where you've got your resistance. So if we get up to 204, we're probably going to run up to 208, maybe tag that, and then fail, and then roll over. So that is a possibility. But I think what actually happens is I think we don't get there. I think we stop right here, and we roll over. And the reason why I say that is just with the gap higher, that makes a lot of sense. That we gapped higher and then failed, and you get the little bounce. We gap filled, you get the little the bounce off of that, and then I think we end up rolling over. It's just because we gapped higher. I'm just going off of what it seemed, what the market did at the open. If we opened up near the close of yesterday, then we could potentially just run higher and continue to build. But because we're making our moves in these big old gaps, that to me tells me that was kind of the end of the move, and I think that was the flush out move. The shorts, anybody who was short, the weak-handed shorts, let's just put it that way, who don't necessarily know that we were gapping right into resistance, they probably got flushed out. And, and now the strong-handed shorts, the people that understand the levels and know that, okay, there's a high probability that we roll over, Doesn't guarantee a win, doesn't guarantee that the trade will work out, but there's a high probability. They're in the trade now. They're still in the trade, like myself, and I think that, I think we roll over. So that's what we're looking at. And where are we going to go? Well, I got levels all along here, but first level is probably this 194, 194.50, 195, somewhere right in there. Probably hit that. And that'll, and then if we break down, we've got 189, 190, and then we've got 186. And these are ranges, okay? These aren't exact levels. They're just, I might have it marked here. Someone else might have it slightly different by, a few pennies or 50 cents or something. It's all about just being in the level. So, so I think that, you got 180, 186, and then you've got 182, and then there should be like a 179, I think is what I saw. Yeah, right about there, 179. And 179 is probably the target, the profit target, or at least a spot. You can mark it right there in red. And maybe we undershoot it a little bit, but this might be a spot where you could look to probably take some profit from this short if you establish it, especially today. I established my short, most of my short. I added to my short, but I established it right here at 195.20. So I'm underwater slightly, but I think that if you got it today, then down right here 179. That's a good that's a good gain. You're looking at $20, and depending on what kind of size you have, that can be substantial. So. But anyways, there's levels all along the way. So you could also take, just sell some as you hit some of these support levels, just sell into some of these support levels, take some profit. That's not a bad way to play it either. Or just trail your stops. That's another option. If the trade works out, starts going in your direction, set a stop loss and trail it. My stop loss, I don't have a stop loss that I've set, but I would stop out up over here, 210, something like that. On a daily close. That's my stop loss, somewhere right around there. Now, I previously had a stop loss, I think, right above this range right here, 195. I set it, but after looking at it, for me, I'm okay risking the loss with because we're so close to this major resistance, this bull market. Trend line support, this red one that goes through the entire bull market. We're so close to it that it's not much more of a loss to just ride the trade out in this range. So I can just ride it out. I can chop around in here. I'm okay. It's only if it starts to break out and break back above and recover this trend line support, then I start to I'll start to question the trade and start to look to exit. Until then, I'm treating this as a bear market rally. This is your bear market, the start of it. This is your bear market rally. Now we've had a pretty substantial bear market rally, so I think we roll over here, and I think we make the next leg down, and that is potentially going to be the largest leg down in the bear market. So potential for a lot of losses coming, and where does it get us? Well, let me scroll out down here. I think the next leg down gets us at least in the triple Qs down here. Let me measure this out just to. Here's your first leg. The next leg is usually larger. So if this is your first leg down, then your next leg puts us. So that would put us below this 143. So I would say it's that. That's probably your next leg down right there. It's a ways down there, 115. So that's a huge drop. And I think that's possibly the next leg. Yeah, that's a 40% drop. And that might be the end of the bear market, to be honest. I mean, it might be here. And maybe we bounce off of this and that's it. So, but I still think we're going to get down and tag this or potentially tag this T2 down here. I've had these targets up here for a year and a half. And whether we get there or not, nobody knows, but it looks like I got a good chance of the market selling off and getting down there. So that's how we're going to play that. Let's look at let's look at some other ones that I've been kind of eyeballing. Well, let's look at this LQD. Yeah, this thing is just, hovering around up here. I'm down slightly on the trade, but only by, a percent or less than of a percent. I think this still looks good to me. No reason to exit this from the short side. I think we're going to probably at least come down and tag this 110 again. And that's most likely where I'll look to take some profit. What else is interesting? Let's look at Microsoft, see how this is working out. Microsoft doesn't necessarily look bearish. Let's go to the bigger time frames. Let's see here, see if we can find anything that seems to make sense. Yeah, that would be support. But that's not really making any sense. Yeah, and I think we tag that as support. So just, Microsoft bounced off its support. There's its support right there. So just bouncing off of it. But if this is a bear market, then this is probably the end of the road for Microsoft. Probably the end of the bear market rally. So again, it just comes down to whether you think this is a bear market or a dip buying opportunity in a bull market. And all right, so here's something else I haven't talked about in a while, and I just naturally look for it, but I sometimes forget to talk about it. I like to use the RSI and the PPO or MACD as another, it's kind of the same basically, to give you an idea. And then also volume. So again, price is one thing, and trend lines and levels, to me, those are very, very important because they tell me where reactions are likely to take place. But then once you see a reaction, if you see a reaction, which you should, but you don't always, but if there's a reaction that helps confirm a trend line, then you need to look at, okay, what was who participated in that, and where's the market consensus, right? Who is there more people, institutions selling, or, where's the big money basically reacting to the market? And so volume is really important, and that's what I have down below. I'm always looking for volume spikes. I'm looking for volume around reaction levels. So, today we're not really seeing selling volume, and that's something to keep an eye on. Like you can see here, the selling volume is just not really there. So yes, we had a sell off right in the first candle, but we're just not getting the big volume yet. So again, you want to see that and to confirm the trend line. Doesn't mean that this is not the end of the road for the bear market rally. Again, I'm interpreting this as a bear market rally, but I'm not seeing confirmation. That's all I'm saying. So that just means that it just doesn't give you that extra quiver in your, that extra arrow in your quiver to know that you're right in the trade. So again, the point is look for volume. Try to understand that and look for volume around reaction levels or trend lines. So that's important. If we jump over to the SPY, let's see what it looks like over there. See if we have any volume. Again, no real volume. And we had some selling actually. And okay, when I look at this on the daily, it looks still looks bullish because we've recovered this support line that I had marked out, fell below it and recovered it. But day's not over. This is just, this is still running. So I think we're going to get a nice big red candle down and we'll start to sell off. That's my read on it. That's my gut feeling. Gold still looks good. Gold is positive. The miners still look good. Everything looks good there. We can take a look at those real. I don't show them as much. I'm trying to find some new trade ideas, but at the same time, shorting the market and long gold miners is working. It continues to work. I mean, yeah, the short is, we'll see if the short, continues to work, but it's worked for the last few weeks, and I think it's going to should continue. And so that's those are really my core trades right now is that. Eventually, we're going to get to the point where I think I'll start looking for long trades to the long side. We're just not there yet. I think we're in a bear market, so I'm looking for that next big old leg down. And then after we get that, we can start to look to, the long side and see what's going on. But yeah, here's gold, gold bullion, just, moving higher. It's just kind of consolidating a little bit, but still moving higher, holding strength in this upper range. So nothing really bearish there. Still bullish. Here's Barrick Gold. You can see we dipped below this and this support line of 2020, and we held. I've got that marked out there on the 1 hour. We held it back here, and then we failed. It then held as resistance right here, and then we retook it, and now we're holding it. So I think this time it'll probably hold, and we'll move up, move higher. AEM. This one still looks good. So looking to take profit right up around here, $53. Probably going to take a little bit there, and then I'll hold a little bit for gap fill, which is going to be around $59 to $58, somewhere right in there. And then I'll probably exit this one. That's just tells me that that's probably a good time to exit. At least exit some, okay? I could hold some of this for a longer, larger term play. Maybe we break above these highs and start to break out above, $64. That's completely possible, and I'll have to evaluate that. But again, I've got a pretty sizable position on gold mining stocks, so I'd like to, while still holding a decent sized position on on Barrick, I'd like to maybe take a little bit of it off with a nice profit. On a trade. So just lock in some profit. That's always a good idea, and let my, helps me keep a core position running. Here's silver. Yeah, it looks interesting. It's above support, so there's your support line. Just go ahead and draw this out. This is a daily chart. You can draw it in the hourly or the daily. Going all the way back here to July of 2016. You've got this downtrend line. We came in, and then as you zoom in, came in, tagged it, held the support, then a big old gap below it. So that's a reaction, right? That's a reaction when you hold support, and then the next day it's a bull trap, or they trap in the bearish money with a big old gap down. Now this ended up being a bull trap. A bear trap. This ended up being a bear trap because it gapped down. Bears maybe jumped on, shorted silver, and then the selling was, there wasn't a whole lot more selling left. And now it's ramped up. So, and we've got an island bottom reversal. I just noticed that right there. If you see this, there's your island bottom. So this is a daily chart. So you've got the gap here, and you've got a gap here, creating this island cluster bottom. That's a reversal pattern that that is usually a bullish pattern that is showing the reversal of that. And so far it's playing out. We're moving higher. So silver actually still looks pretty good. I think silver is probably going to head up towards the $17 range, yeah, looks good there. So here's something interesting I noticed. Looking at Walmart, I was kind of eyeballing Walmart and a couple other of these big box retailers. But look at Walmart here. So this is a daily chart, and we've got a bearish rising wedge playing out over this daily chart. You can see this goes all the way back to November of 2015. So pretty big wedge, but really lots of reaction. So let's look at the bottom of it. You've got support, support, support. You can see the reactions. Here's another one, support. So I've got that trend line marked out. We've got, 4 reaction areas. And then on the top, resistance, resistance. And then as you zoom in, lots of tags of that resistance. This was a breakout and it failed, closed back below resistance. So that is with volume. See the volume? So as soon as it spiked over resistance, buyer or sellers came out and smashed it back down. So that's just confirming that trend line. Again, it held, and then you can see, look what's happening right now. So, and then again, also look right here. We broke out above that resistance again, and then it closed back below resistance, and then here gapped up and broke, and then failed, and sold off pretty aggressively, sold off. But yesterday we actually closed above this resistance line. So if I move out, that's really the first close that we've had, and I think that's going to be a fake out. To be honest, I think it's a false breakout, but it might have a few more days to go. We could easily even see kind of a ramp higher Walmart's at all-time highs. So even though the market is well, it's not quite at all-time intraday highs, but it's up there, really close. And so even though we've had a big sell-off in the stock market, Walmart continues on the bull market. I just don't think that's really probable. I mean, or like, let's look at how Walmart performed in 2009. See how they actually perform right here. Here, it's just a blip on the radar, this the Great Recession for Walmart. But you can see from the high to the low, that was a 26% drop in Walmart. And that just shows how recessions play out for Walmart. Yeah, it holds up stronger than a lot of the others. So it's not necessarily a bad play in a recession, but I still think you're going to get a drop. Walmart's making all-time highs. So I would expect we're going to at least get, let's say a 25% drop. That's going to put us down here somewhere that's going to be a breakdown in this bearish rising wedge. And once you break the bearish rising wedge, you're probably going to break down. So I think Walmart's heading to $57 when I look at this. Right about, let's mark that out. I would actually be interested in buying Walmart long if we start to actually sell off. But ultimately, yeah, you can see here's your trading. This is a long-term trading range in Walmart. Going back about there. This goes all the way back to 2000. So... this goes all the way back to 2000. Here's 2011. And this is your stock buybacks. This is your bubble, basically. And even though Walmart's still running higher, I think Walmart's coming down to at least, $60, $57. Could even undercut, go down to 42, or even undercut this. And then maybe, and that's probably a great area to buy Walmart, to be honest. If you can get it down around $37 or so, that would be an area I would definitely look to be going long. And, but again, that's just something to point out. So I want to keep an eye on that trade. If this fails, starts to sell off, to me, this is a good short. So I'll be looking to short Walmart most likely if we get some sort of a breakdown. And I'll short it right up here along resistance. You can short right along resistance in a bearish rising wedge, or you can short on a breakdown in a bearish rising wedge. The breakdown is obviously the higher probability, but this is an objective area to short too, and you can potentially capture more profit. It's lower probability, higher profit, and that's just how it works. That's how trading works typically. When you have a higher profit, you have a lower probability, and that's just how it works. But again, keep that up on your chart if you're interested in that one. That's a trade idea. I really just kind of found it, but there's something there. So I think that might be an opportunity for a short. But again, this is just a setup, so it hasn't actually played out. Walmart's still breaking out. You can see it right here. Still breaking out, breaking higher. Again, I think we fail. I don't think we actually break out. I think it's a false breakout. I just can't see, even though Walmart, people are at the stores buying supplies, I can't see Walmart. If consumer spending is hurt, which it is right now, I mean, it's just a fact. People aren't spending money, and people are saving money, then Walmart's going to be hurt no matter what. They can't survive that either, so they will be hurt. And that means that this is a good potential setup for a short, because this is the initial move is higher, even though Walmart's earnings and revenue is going to be a lot lower. So that's a trade idea to keep an eye on. All right, and I'll wrap the trade up with just the cues, and I just wanted to kind of touch base. So look at what's happening. We broke this. This is the 1 minute chart, and again, the hourly and everything I think is close to pretty much being at resistance. And if we fail here, then we've got lower highs on this 1 minute chart. So I think we're going to fail here, but you can see we're just struggling. We've kind of hit a plateau. We're just chopping sideways, consolidating. We broke this trend line here, back tested twice. Here's a back test, here's a back test, and then we failed. And we've started to just go sideways to drifting lower. So I think that's going to continue. I think we're going to drift lower. Maybe we get a nice impulsive sell-off today, towards the end of the day, and that's going to be the end. That's where I think we're at in the market. So thanks, guys. Thanks for tuning in. Catch you on the next video. Bye.